Good afternoon, traders. Aries Trading talking here, and we are bringing to you tonight's nightly trading review report. It is June 12th, 2014, and let's get started looking at the indices. S&P 500 had a retrace today. There were some negative reports in the news for geopolitical issues, but overall looked more like a technical bounce off the upper trend line, which we discovered yesterday, but pretty much an inside day. Nothing too much to speak of. Volume really wasn't there, nor was there any major Fed announcements to give us any real scare. And looking at the Russell and NASDAQ, really same story. Inside day, not much to speak of there. What is to speak of there is a movement in the sector, which is of note, is the gold, and specifically the juniors. And you can see here things we love to look at here at Aries. We have volume coming in. The unbalanced volume is very tilted towards the positive, and you can see what looks like a major continuation move, and you really have this level right here, 46.34, 45.70-ish. In fact, I'll do everybody a favor and point that out to you guys right there. That right there would be my target first. I will look forward to retrace before I get involved. But big picture, this is looking very, very interesting. It looks like we have that trend right there that's finally gotten broken. And gold has been in the news within the last few years. Has retraced off the highs of 2012. We did earlier this year see gold become the best performing asset class, and it looks like it might continue to do so. We know there was a pullback. There usually always is a pullback in any major move in any commodity, but what's particularly interesting is that it looks like the miners and the metals are moving ahead of the actual physical gold price, and I believe there's anticipation of this level. This is the GLD, the ETF for gold we're looking at here. And you can see we followed this quite closely. This was a major level. I believe the futures price for this was around 12.45, 12.38, and then we were seeing some inflection point of 12.50 over here, or 122.59 in the ETF. But regardless whether we're following the ETF or the actual futures price, this is an important inflection level. And the fact that this held, that this might have found another bottom after this big retrace from March, could mean that we might get the next leg up for gold. You can see here that I always have my ideal trend lines. I like to see stocks compare against my ideal performance, and generally that's an uptrend defined by two parallel lines. And though it sounds vague, it actually works quite well, and it has really less in our decision-making process. We want to see an uptrending parallel channel, and that's usually the indicator of consistent, solid buying. Of course, there's retraces, there's flags within that, but that is something we've always wanted to see. So when that gets violated, when it gets bigger or smaller, meaning the bands, the upper band and the lower band, they're increasing or decreasing, that tells us about the psychology and the movement of the price action. And you can see here with gold that it really hit that upper end, which we defined here. That became our initial point for this right here, this upper trend. And then it really retraced back, had another go at it, and then they hit this heavy trading zone, which we've been following for years previously to this. But this is right now going back all the way to 2013 January, so about 2 years. But this is a major inflection box right here, and it really determines price action. So we're cautiously optimistic for gold. We think it's really loose and fast, but the movement in the minors and the juniors cannot be ignored, and it definitely presents an excellent risk reward. Maybe not a long-term strategy, but definitely if you're swing trading for a week or 2 weeks, it might be a very good strategy to get in. Wait for a nice setup. When we say nice setup, we usually mean look for a gap up of 4% or more. Look for a nice flag to develop or a good solid level of consolidation. Make sure the unbalanced volume and the MACD has bearish signals, and then make your best possible trade from there using your own discretion. Okay, so covering gold today. Now let's move on to some stocks. Yesterday we talked about GMCR. Of course, we are still in GMCR, and what did they had? Up almost 5% at one point. Closed the day up 4 6.11%. And look at that. He nicked right there on our level. We don't make this stuff up. This stuff works consistently and safely. And our target, 123.50, was our initial first profit target. We really like the action. Yesterday we indicated that this retrace was worrisome, but this kind of invalidates that, puts this day as an inside day, and now I really want to see this get tested and move past these levels. Looking at the volume coming in, we might expect a gap up tomorrow past this, depending if there's no major macro news overnight. But this is looking very good. We really like how this has found a nice level. We like the intraday action, and we like the incoming volume in. So it's very promising. So stay tuned for that in the next coming days. Next stock we want to talk about is ARTX. ARTX Corp. This is another one we've been following. It had a great March, and as you can see, again, we love these charts, this long, nice, easy channel. Now you can notice that it kind of is an expanding channel right here, but that's okay. That's good. What is important is that it holds this trend right here that you see right on the bottom. That's the most important thing. If it really violates that trend, here's a fake out day, really violates that trend, that's usually our sell signal. We don't make up numbers. We let the market tell us when to buy and when to sell, and that is definitely the get out line. But remember we talked about before how we like to see parallel channels. You can see here that an expanding channel really tells us something. It tells us that this stock has potential to move to the upside, that it has got a bit of a Momo tendency, which means that we want to sell and take some profit when it gets a little oversold, I guess would be the best way to put it. But basically, whenever you see these big moves intraday, sort of, what could be like a 10% move or a 15% move, here would be example. Here again would be example. And today we were up 13%, which was just absolutely phenomenal for what now is a $5 stock. And you can see here, we always talk about, look for that consolidation along the bottom trend, and that would have been an excellent trade. Take it to the top of the channel, sell there, and then wait for another level to develop. Or if you really wanted to be patient, wait for it to come back to the bottom. Never chase a trade. Trades always move in waves. That's important concept to remember. If you see a stock and you're like, oh no, I missed it, you didn't. The worst mistake you could do as a trader is getting a poor level to be in it. If you really want to be in it, then what some trading desks recommend is buying very small. Again, that's your discretion. We cannot advise what you do explicitly, but in our experience, we have seen traders making their own decisions, and some of those traders elect to buy small, have their risk, and just be involved and wait for the price action to come in. But being seasoned traders that we are here at Aries, we will tell you that our salaries is to wait for any stock to come in. Very rarely will you see stock go ahead of you. If you see that kind of action and you really believe that something fundamental has changed, or it's a major move, or you're watching it, obviously you can play a momentum play, but we don't recommend it. But that's the minority case, and that's important to remember. That's the minority case, and most times it will come back in. Now, in the case of ARTX, here you go. If you didn't respect the levels, and let's say you bought around 424, we recommend you probably have a tight stop around $4. Let it really hold that level. Because if you really want to hold it past the $4, because the next time it really was worth it, was sort of like $3.33. That's a 70-cent difference, and that's a lot of profit to waste. Now, yes, it came back, but what if it didn't? What if it got faked out that day? That happens to a lot of traders. They got faked out. Now they're down big because they didn't have patience. It matters so much that you pick the correct levels, and really right here is a correct level. You have a nice big consolidation. You have this trend still in play, and you would be in prime position for this major move to the upside to come. And you would, more importantly, you could have taken some profit there, but more importantly, you would have survived the retrace because your levels would have been down to here. And that's what's important. It's not so much if the stock goes up. You want multiple waves. Some traders, they trade the initial swing, and that's fine. We here at Aries, we want our picks to work for us over and over again. Trade in and out of them while maintaining a core position. And with ARTX, that's why we wait. That's why we honor our rules. And again, it makes us be in the trade longer. It gives us more opportunities to make money, and it frankly makes our jobs easier than having to necessarily constantly watch the stock and pick more meaningless levels. Say this intraday level, which got easily, this daily level, which got easily violated multiple times since this initial consolidation. As you can see here, we have an arrow too that. What would have been a major level while this was still in play, you could see that it nicked this and then went up to make another high. If you were to chase it here, same sort of thing. You have all this all this percentage to lose before you see it make another wave up. So don't want to beat this thing too much to death, but it's very important that you have patience. So with that said, let's move on to our other stocks. Next one we have is Rite Aid. Again, we love these long-term uptrend channels. They work. They make our lives as swing traders, intraday traders very easily. Now, with Rite Aid, this stock actually presents a pretty good buying opportunity. Again, that's your choice to make, but we think that there's a really good buying opportunity right around here. And we'll tell you why. We have this long inter-year uptrend channel right here being tested. We have this pretty orderly retrace. The volume is a little concerning, but not too much so. But given all this volume, it still has sort of held this level at 725. Little nick right there, but again, butt right up. Today was more of an inside day. So we're looking to get long Rite Aid either tomorrow or early next week. And we would probably hold below this level right here, $7, probably $6.92-ish. Maybe a complete ad would be $6.74. But definitely after $6.74, we do not want this. Imagine what that chart would look like. Big red candle down or series of red candles down. Not really something you want to hold. However, the risk reward is right there. It is very good because given our trend, about at 734-ish, we're looking at the next target to be 1850 and then probably on to 13. And again, Rite Aid has been in the news quite a bit, so there is some headline risk with this one, but this is exactly what we're talking about. This is where patience comes in. If you believe in the company, you've been following it, this would be a good opportunity. Now, all opportunities produce positive profit results, but a good trade is a well thought out and planned ahead and executed trade. Last one we'll cover tonight, as we're approaching 13 minutes, is BDSI. And BDSI, we have the same uptrend channel. Sort of was consolidating for a long time, really. Hasn't gotten into anything interesting until, I would say, this year. Again, this is a biotechnology stock. With biotechnologies, we always reiterate to check the company out. Learn the fundamentals. Know when they report earnings. Know when they report their new drugs or new products. It is imperative. You do not want to be caught off guard with a biotech company. Now, would we buy this company right now? No. And think about what we talked about. We talked about waiting patiently for consolidations to develop. Now, this might be a great momentum trade, and if you are a momentum trader, this is something that you are definitely interested in. Why? You have price discovery, which means there's really no levels up to stop the stock. You have an incoming and increasing volume, which is very good. And you have the potential to build another more intense slope, let's say, but basically a higher slope here, something like that. As for example, that's something that momentum traders will look to do, because the more extreme the slope is to the upside, the faster you'll come crashing down. That's when you want to be selling. To us, this is a sell signal. We'll be selling oil and pricing out. We'll still have stock to hold. We're currently not in this, but we're using this as an example. We will be selling out to here, and then we'll be waiting for reconsolidation, maybe for it to test this line, possibly violate it, but we probably would be really interested around 1070 again, around this condition. We want to see good building of positive higher levels. We don't always get that. As we said, stocks tend to move in waves. And again, think about this. If we were back in April talking about the stock, we have almost the same situation here. I'm going to move it back. So now the top here, this right here is January 27th. If you bought it that day, same sort of idea, and you could see it even more clearly. If you bought it that day, you're looking good, looking in the green. Next day, reversal, and then sort of cup and handle forming, nominal high, and then boom, there it comes, right there. That long flag, but guess what? That is a perfect opportunity to buy. You have a quick out, either it works or it doesn't. Our out in that case would be 646-ish, or really probably 574 for a complete out, but we would look to see the gap hold first, and that's exactly what happened. Look at that. Gap held, nice bounce. Look at that. You would have gotten the stock around, let's say, 687 with commissions and slippage, and you would have been in business and really, really holding out, and you would have doubled your money. And that's how it's done, and that's what you need to be looking for as a responsible trader, is a quick in and out. So you want a good stock when it's looking bad. So right now there's a good stock that's looking good, and that always attracts amateurs and fresh money in, and that's not always the best place to be. So with that said, thank you guys for watching. Remember to like this video if you're watching it. We're going to continue with changing the format up this week. This is our first week of making videos. Subscribe if you like what we're doing already, and we will be beginning to post morning videos and morning setups in the next coming weeks, as we feel that it will help you guys out as a traders. Most of you should be doing the majority of your homework in the morning. That's when the news is fresh and the pre-market moves are very important. So stay tuned, keep that in mind. Thanks for watching, and we'll see you guys.